Are you a beginner in the world of real estate investing and feeling overwhelmed by all the conflicting information out there? Look no further. In this video, we're going to debunk the top 10 real estate investing myths that could be holding you back from reaching your investment goals. Whether you're a seasoned investor or just starting out, you won't want to miss this. So, grab your notepad and let's get started. Myth number 1. Real estate investing requires a lot of money upfront. Now, it's true that some real estate investments, such as buying a rental property, do require a significant amount of money upfront, but the good news is that there are many other ways to invest in real estate with much less capital. One such way is through real estate investment trusts, or REITs. REITs are companies that own and operate income-producing real estate properties, such as apartment complexes, office buildings, and shopping centers. As a shareholder in a REIT, you can earn a portion of the income generated by the properties without having to purchase them outright. Another option is crowdfunding platforms, which allow you to pool your money with other investors to invest in a variety of real estate projects, such as fix and flips, apartment complexes, or commercial properties. These platforms typically have lower investment minimums than traditional real estate investments, making them accessible to a wider range of investors. And then there's wholesaling, which involves finding distressed properties, negotiating a deal with the seller, and then selling the contract to a buyer for a profit. Wholesaling requires little to no money upfront, as you're simply acting as a middleman. So, as you can see, real estate investing doesn't always require a lot of money upfront. With options like REITs, crowdfunding, and wholesaling, you can start investing in real estate with much less capital than you might think. Myth number 2. You need to be an expert in real estate to invest. Now, while it's certainly true that having knowledge and experience in real estate can be helpful, it's not a requirement for investing in the market. In fact, there are many successful real estate investors who started with little to no knowledge of the industry. One way to invest in real estate without being an expert is by working with a reputable real estate agent or broker. They can help you identify properties that are suitable for investment and guide you through the purchasing process. Another option is to partner with more experienced investors. By pooling your resources and knowledge, you can learn from their expertise and gain valuable experience in the process. Additionally, there are many educational resources available that can help you learn about real estate investing. Books, podcasts, and online courses can all provide valuable insights and knowledge. The key is to start small and learn as you go. Don't be afraid to make mistakes, as they can often be the best learning opportunities. So, to sum it up, while having knowledge and experience in real estate can certainly be an advantage, it's not a requirement for investing in the market. By working with professionals, partnering with experienced investors, and educating yourself, you can successfully invest in real estate without being an expert. Myth number 3. Real estate investing is a passive income stream. While it's true that real estate investing can generate passive income in the form of rental income, it's not entirely passive. There are still responsibilities and tasks that come with owning and managing a property. For example, as a landlord, you'll need to handle tenant screening, rent collection, and maintenance requests. You may also need to manage contractors and vendors for repairs and upgrades. Even with options like REITs and crowdfunding, there can still be a level of involvement required. As a shareholder in a REIT, you'll need to stay up to date on the performance of the properties and make decisions about whether to buy or sell shares. Similarly, with crowdfunding investments, you'll need to monitor the progress of the project and make decisions about whether to continue investing. However, it's also important to note that real estate investing can be much less time-consuming than other forms of income, such as a traditional 9-to-5 job. And if done correctly, the income generated from real estate investments can continue to grow over time, providing a long-term passive income stream. So, to sum it up, while real estate investing can generate passive income, it's not entirely passive. There are still responsibilities and tasks that come with owning and managing a property, or even investing in REITs or crowdfunding. However, real estate investing can still be much less time-consuming than other forms of income and can provide a long-term passive income stream. Myth number 4. Real estate always appreciates in value. While it's true that real estate can be a great long-term investment, it's not a guarantee that it will always appreciate in value. The real estate market, like any other market, is subject to fluctuations and can be affected by a variety of factors such as economic conditions, interest rates, and local market conditions. There have been times in the past where real estate values have experienced significant declines, such as during the 2008 housing crisis. It's important to note that investing in real estate does come with risk, and it's possible to lose money if the market turns against you. That being said, real estate can still be a smart investment if done correctly. One way to mitigate the risk of declining values is to invest in properties that generate consistent rental income. This can provide a reliable income stream even if the property value does not appreciate as much as you hoped. Another strategy is to invest in areas with strong economic growth and increasing demand for housing. This can help ensure that there will be a strong demand for your property, potentially leading to increased value over time. So, to sum it up, while real estate can be a great long-term investment, it's not a guarantee that it will always appreciate in value. The real estate market is subject to fluctuations and can be affected by various factors. However, investing in properties that generate consistent rental income and investing in areas with strong economic growth can help mitigate the risk of declining values. Myth number 5. Real estate investing is a get-rich-quick scheme. While some people may have had success in real estate and made significant profits quickly, it's not a guaranteed path to wealth. Real estate investing requires time, effort, and often significant financial resources to be successful. In fact, real estate investing can be a long-term game, with returns on investment taking years to materialize. Real estate investors often have to be patient and wait for the market to change or for their properties to appreciate in value. Additionally, there are many costs associated with real estate investing that can eat into profits, such as property taxes, maintenance and repairs, and property management fees. That being said, real estate investing can be a great way to build wealth over time if done correctly. It's important to approach real estate investing with a long-term mindset and a willingness to put in the effort and resources necessary to make it successful. One way to build wealth through real estate investing is through the use of leverage, such as mortgages or other forms of financing. This can help maximize returns on investment, but also comes with added risk. So, to sum it up, real estate investing is not a get-rich-quick scheme. It requires time, effort, and financial resources to be successful. However, with a long-term mindset and a willingness to put in the work, real estate investing can be a great way to build wealth over time. Myth number 6. You can't invest in real estate without a lot of debt. While it's true that many real estate investors use debt to finance their investments, it's not a requirement. There are a variety of ways to invest in real estate without taking on significant amounts of debt. One option is to invest in real estate investment trust rights, which are publicly traded companies that own and operate income-generating real estate properties. Investors can purchase shares in these companies, which can provide exposure to the real estate market without requiring the same level of capital investment as purchasing an actual property. Another option is to invest in real estate through crowdfunding platforms. These platforms allow investors to pool their money together to purchase and manage properties. This can be a great way to invest in real estate without taking on the same level of debt as a traditional real estate investor. There are also ways to invest in real estate using your own capital or by partnering with other investors. This can help minimize the amount of debt required and provide greater control over the investment. So, to sum it up, while many real estate investors do use debt to finance their investments, it's not a requirement. There are a variety of ways to invest in real estate without taking on significant amounts of debt, including through rights crowdfunding platforms and partnerships. Myth number 7. Real estate investing is only for the wealthy. While it's true that real estate can require a significant amount of capital investment, there are ways for investors of all income levels to get involved in the market. One option is to start small by investing in a single-family home or a duplex. This can be done with a relatively small amount of capital and can provide a way to gain experience in the market and build a portfolio over time. Another option is to invest in real estate investment trusts (REITs), which are publicly traded companies that own and operate income-generating real estate properties. Investors can purchase shares in these companies, which can provide exposure to the real estate market without requiring the same level of capital investment as purchasing an actual property. Crowdfunding platforms are also a viable option for those looking to invest in real estate without a significant amount of capital. These platforms allow investors to pool their money together to purchase and manage properties. This can be a great way to invest in real estate without requiring the same level of individual investment as traditional real estate investing. Real estate investment clubs and partnerships can also provide a way for investors to pool their resources and invest in properties together. So, to sum it up, real estate investing is not only for the wealthy. There are a variety of ways for investors of all income levels to get involved in the market, including starting small, investing in REITs, crowdfunding platforms, and partnering with others. Myth number 8. Real estate investing is too risky. While it's true that any investment comes with a level of risk, real estate investing can actually be a relatively low-risk way to build wealth over time. One reason for this is that real estate is a tangible asset. Unlike stocks or other investments that can be affected by market volatility, real estate has inherent value as a physical asset. Additionally, real estate investing can provide a way to generate passive income through rental properties, which can provide a steady stream of income regardless of market conditions. Another way to mitigate risk in real estate investing is to thoroughly research potential properties and markets before investing. This includes analyzing market trends, conducting property inspections, and understanding local laws and regulations. Working with a real estate agent, property manager, or other industry expert can also provide valuable insights and assistance in minimizing risk and maximizing potential returns. Lastly, investing in real estate doesn't have to be an all-or-nothing endeavor. Investors can start small, with a single property or investment, and gradually build their portfolio over time. So, to sum it up, while real estate investing does come with a level of risk, it can also be a relatively low-risk way to build wealth over time. By thoroughly researching potential properties and markets, working with industry experts, and starting small, investors can mitigate risk and potentially earn significant returns. And that's a wrap on our video debunking the top 10 real estate investing myths for beginners. We hope this has provided you with valuable insights and cleared up any misconceptions you may have had. Remember, real estate investing can be a great way to build wealth, but it's important to separate fact from fiction. If you found this video helpful, don't forget to like, share, and subscribe for more informative content. Thanks for watching.